Greetings, friends. My name is Weston Nakamura from Blockworks Macro in Tokyo, and it is Monday, June 5th, 2023, after Asia markets close. Welcome to the Market Death Podcast, bringing you global market commentary and analysis from the Asia Pacific trading session so that you know what happened overnight. And today, we are going to follow up from Friday's episode by looking at market price action in the China property and development indices on the heels of Friday evening's after-market report of new government stimulus measures that had been announced or that had been reported on. And those stimulus measures are in order to support the property market. Now, if you didn't see my previous episode of Market Depth on Friday, I actually suggest that you stop watching this and watch the Friday episode first. Because if you just continue to watch this, without that context, you'll likely just be very lost, whether you realize it or not. The episode's called "Is It Too Late for China's New Stimulus Measures?" Again, it's just from last Friday. It's the previous episode of Market Depth, previous to this one. I will also leave a link in the description to this video as well. But before we get into this sort of deeper look at today's price action, out of China and Hong Kong's property development sectors, and what appears to be pretty clear insider trading activity from policy actors within China, as well as also a detailed look into global equity market reactions to this, this fresh Chinese stimulus headline. Before all that, I just want to quickly mention the key global macro events out of Asia that you need to keep an eye on for this week ahead, this week in which the FOMC is in its quiet period. Okay, which means no singing along at Grateful Dead concerts, Chair Powell. Okay, so on the data front, we have China trade data on Wednesday, and then we also have China CPI and PPI on Friday. And that's going to be at the forefront for data because that's going to give us yet another measure of either further confirmation of this continued deterioration in China, or if it's starting to maybe turn less worse and potentially areas of bottom in sight for the Chinese and therefore the broader global fundamental macro picture. But data aside, the most important event this week out of the Asia-Pacific region with global market implications is the Reserve Bank of Australia's rate decision tomorrow, Tuesday. Okay, because the RBA has been leading the path for rate hikes. They've also done rate pauses, and then they've also resumed their rate hiking again at this very last meeting. Okay, and so currently, with the most recent Fed policy narrative being thrown out there by Fed speakers themselves, being one of a potential rate hiking pause in the United States, and then like a pause and assessment. Well, the FOMC and really every other central bank that's hiking right now, they can thank the RBA for kind of pre-setting some sort of precedence of a pause, and then a resumption of rate hiking, okay? And then, so therefore, this next RBA meeting tomorrow, it's either going to have, an outcome of another pause, okay, which would be now the second one of this overall hiking cycle, a second pause, or they're going to hike, right? And an RBA hike would set precedence for an actual resumption of consecutive hikes following a one-off pause for a part two, I suppose, of rate hiking cycle, okay? So either way, keep your eyes on the RBA and on Governor Philip Lowe's commentary on why they're doing what it is that they're doing and what they see going ahead, because the RBA may very well be setting the stage for almost normalizing what was previously unfathomable, this act of truly going meeting by meeting and breaking this notion of once a central bank goes in one direction, then it takes it all the way in said direction for the next several meetings consecutively, right? The RBA might just be shattering that whole sort of framework that we've just become not just accustomed to, but we just have taken for granted as like an inevitable path. It might not be the case anymore. Okay, so let's just take a look at the market responses globally to the China stimulus to the property sector that was unveiled via a Bloomberg article on Friday evening in Asia time this past Friday. Here's just the general picture for Asia equity indices at Asia session close for today on Monday. Might actually seem that the standout market for today might be Japan, with the Nikkei, a massive 2.25%, which is its biggest single-day rally since January of this year, i.e., this is the biggest single-day rally over these, 8 or 9 consecutive weeks of foreign stock inflows into Japan that have been propelling Japanese equities to hit, new 33-year highs again and again and again, day after day after day, continuing to be by far the best performing equity market globally. For those of you who have seen last Friday's episode and therefore know what the context of everything is, right? You'll probably look at the regional end of day performance picture for today, for Monday, right? And find that the most notable market performance out of Asia for today is actually the markets in Hong Kong and China, right? Even though they might appear on the surface just to be more or less flat or like not doing anything notable, looking at today in isolation, Hang Seng's closed at its highs of the day, but it didn't even exceed 1% up. And then the CSI 300 in China is actually down on the day, okay? Now, this is very peculiar price action and market behavior for those two regions because, as we know, it was in between last Friday's close on the left side of this screen and today on the right side of the screen. It was in between those times that we had these reports of new stimulus measures out of China to support this like distressed Chinese property market, which once again came out after the Chinese markets had already massively rallied and closed at those levels on the left side. Notably, the Hang Seng Index up over 4% for Friday's trading day in a massive reversal rally that pulled the Hang Seng out of official bear market territory, which it hit only just 2 days prior. Okay, and of course, this China stimulus headline had market impact on global markets, cross-asset, okay, from base metal commodities to even the Dow Jones Industrial Average in the U.S. And so given that this headline had dropped after Asia markets had already closed for trading for the week, okay, but it also dropped before U.S. market AM open on Friday, okay, that chronology of events would mean two simple things in terms of market reactions. The first thing is that for Europe and especially the U.S., in which, again, markets were still in pre-open status at the time of the Chinese property stimulus headline, the U.S. then had a full day of trading to react to it, and react they did, okay? Because as I mentioned, the Dow was the major U.S. index that crushed it for the day on Friday. And why was the Dow index up over 2% on Friday? Well, just take a look at the Dow 30's number 7 index heavyweight, Caterpillar. Caterpillar is on a monster move right at U.S. market open in response to these headlines. Okay, Cat shares, which had been lagging all year, just down like 15% year to date prior to this, in large part due to its exposure to China's construction activity and this like great China reopen, which never came to fruition. Well, that finally got some positive news out of China, who's going to be stepping in to rescue the property developers with stimulus, i.e. some construction activity, okay? And therefore, CAT rallies over 8% on the day on 2.6 times its average daily volume, and it leads the Dow 30 to lead the SPX and Nasdaq, okay? So that's the first thing in terms of like chronology events. Chronology of Asia markets close for trading on Friday, and then China stimulus headline drops shortly after Asia closes, but before U.S. opens, and then U.S. stocks subsequently react accordingly. Okay, the second thing in terms of the chronology of events for a Friday Asia aftermarket headline to drop would therefore mean that the first chance for Asia cash equity markets to get to react to that Friday post-close headline is Monday morning at Asia markets open today. Okay, just very straightforward. Okay, but here is where things get interesting. Okay, so regarding the Asia equity markets initial response. Okay, first let's just take a look at Australia and Japan, which are not only the first two equity markets to open to kick off the Asia trading day or the global trading day, but Australia and Japan are also the two markets ex-China that have the most exposure to something like an infrastructure stimulus unveiling out of China. Okay, Australia because of for raw materials and mining, and then Japan for a whole host of areas, including construction and industrial activity equipment that it sells to China for such infrastructure and building related activity to take place. Okay, and so as we can see, the ASX jumps up 1% higher immediately at market open, because that's its first chance to react to the overnight headline out of China, and it holds those high levels throughout the day. Mind you that this is happening on the eve of that major rate decision out of the RBA on Tuesday, tomorrow. And obviously the RBA is going to have direct market moving implications for the ASX for Australia. Okay, but hey, look, Chinese property stimulus news, that can't be brushed off either, regardless of whether or not we're on the cusp of an RBA meeting. Okay, so a positive day on the ASX in first reaction / response to the China headline. Now, let's take a look at Japan again. So first of all, yes, of course we're going to get the best one-day rally so far amidst this broader Japan equity boom underway, because the broader Japan equity, rip-roaring like bull market that's been occurring, that's been happening despite China deteriorating right next to it. Okay, so the Nikkei index being up over 2% should be what happens in response to such a headline. If we get a sudden China property sector stimulus headline, that's an additional upside boost to then have to price into the Nikkei. Okay, and so you're going to get this gap up at the open, which we did, and you're going to get a close at the day's highs and a 2.25% rally as a first response market reaction to the headlines. Okay, but on a single stock level, this is midday trading day chart for Japan ticker 6301 Komatsu. Komatsu is the caterpillar of Japan. It's the world's second largest construction machinery manufacturer. The stock ended up closing up over 5% on the day and at its highs of the day. In fact, Komatsu shares actually broke out to new year-to-date highs today off the back of this. And then again, on very heavy volume. Because if you recall me saying recently on Market Depth, the CFO of Komatsu, after its most recent quarterly earnings release, just very recently, he said that they see no China recovery in their sort of business and their forward outlook and their guidance for the rest of this year. Okay, so that's what the expectations were. So that's why an aftermarket China stimulus headline would be a very positive surprise for Komatsu to break out to a new year-to-date high. Okay, because this is not within the expectations of the company's guidance. And let me show you CAT again, but on a year-to-date chart as well, in contrast to Komatsu's year-to-date high for today. For CAT year-to-date, CAT shares had actually been going in the opposite direction as Komatsu, right? It's actually been hitting year-to-date lows. And Friday's China stimulus response rally was off of those year-to-date lows, okay? So, be it CAT having its best day of the year off its year-to-date lows and pulling the Dow up to rally 2% and outperform SPX and Nasdaq in the U.S. market open on Friday, or be it Komatsu to a new year-to-date high at Monday Asia Open today, alongside the Nikkei logging its best single-day jump for this current incredible rally cycle for Japan, right? These markets reacted forcefully at the first chance upon learning of this China stimulus of the property sector. Now, before I get into what China did in response today, just give you a quick reminder of what happened last week in the Hang Seng and in China equity markets leading up to Friday. So China equities had been getting absolutely slammed, led downward by the property developers who are in serious crisis mode. And the downside really accelerated in the back half of May. And then by last Wednesday, the Hang Seng index had entered bear market territory, down 20% from its peak. And that's when, dollar yuan had weakened through the 7.1 level. But then on Friday, during China and Hong Kong cash trading hours, we saw a massive reversal rally out of China and the Hang Seng index in particular, which then pushed across to upside in global equities. Okay, and this sudden China equity reversal rally was based on really no news or developments whatsoever, to catalyze it. Now, much of the 4% index rally on the Hang Seng for that Friday was driven by a vicious short squeeze out of the Hang Seng tech sector by the mega cap tech names, right? Alibaba, Tencent, Baidu, Meituan, JD, and so on, right? But what really killed it during Friday's trading session was the property and development sectors, okay? With some measures of the sub-index up nearly 10% on the day, such as HSMPI. And then within, single stock names within the sector making huge gains on the day on huge trading volumes. Things like Sunex Services. Okay, so on Friday we had a 6.6% gain on 30 million shares versus 11 million average daily volume. Country Garden was up 9% on the day on 500 million shares versus 176 average daily volume. Long 4 Group Holdings was up 17% on the day for Friday on 40 million shares versus 16 million ADV. China Resources Land Friday was up 9.4% on 22 million shares versus 11 million ADV. Okay, this all happened in the heavily beaten up and fundamentally self-destructing property development sector prior to the aftermarket headline of targeted government stimulus coming to rescue the property and development sector. Now, by some measures, in fact, as we went over, such as the Hang Seng China A Properties Index, by this index, this was actually started bottoming out and had begun its reversal rally days earlier, ahead of even the broader Hang Seng Index, as well as the yuan finding bottom. I suggested that this sure indeed does look like a very clear case of insider trading, in which either Chinese state officials themselves or those with knowledge of imminent policy unveiling, they had acted on that material, soon to be but not quite yet public information, going long to buy the worst of the worst sectors in this horrendous overall equity market, and doing so against an accelerating bloodbath in these markets in a macro fundamental deterioration picture that are reflecting one another. Terrible macro fundamentals, terrible equity markets, right? And they went long into that, and they were doing so in such size that they were able to actually impact markets to the upside, as you can very visibly see in market price action here on this chart. And so, look, it all just simply comes down to just chronology of events against the chronology of market price action. What we need to now also look at is the market reactions after becoming public, okay? Hence me spending the better part of this episode going over the various regions around the world and the single stocks and all that and their respective one-way upside directional market reactions after the fact, upon their respective first opportunities to price in this new information at their respective subsequent market opens, okay? So, with everything that's even slightly tangentially related to a new China property stimulus package unveil reacting sharply positive around the world, and by reactions being sharp and swift, that implies, a market that's been caught off guard and immediately repricing accordingly, okay? So with all that, why don't we now look at China's property sector performance for today, Monday, for its first chance for it to react to its own government's stimulus measures directed at its own sector, the property and development sector headline that had been revealed on Friday after market close. At China AM market open today, the Chinese property sectors and the stocks within, they had immediately plunged downward at market open. The Hang Seng Mainland Properties Index, okay, the one that rallied nearly 10% on Friday before the news, responded to the news by falling nearly 3% down right at market open, while the broader Hang Seng Index was actually up. China property and development stocks spent the entire day in the red and closed the day down in both of these indices, the Hang Seng Mainland Properties Index, HSMPI, as well as the Hang Seng China A Properties Index, HSCAP. As for single stocks, Sunac Services, that was up 6.6% on Friday. That's down 4% today. Country Garden, which was up 9% on Friday, that's down 4% today as well. Long Four Group Holdings, which is up 17% on Friday, is flat on the day. China Resources Land, which is up 9.4% on Friday, is slightly down 0.6%. These are not the reactions that you would expect out of these particular names and this sector overall on that headline. Okay, so now to look at an updated chart of the broader Hang Seng Index and the two property developer indices over the last few days of this very shady price action. Friday, June 2nd at market open, suddenly everything reversed and rallied, and the property sector had led the way to the upside. Just one direction upward on Friday to close right around its highs on the day. Okay? An inexplicable catalyst absent rally led by the property names. Then, after market close, the news hits the tape that China will provide stimulus and aid to the property developers. And then at subsequent market open today, the sector crashes. Okay? Peculiar chronology and price action? Well, no. Not really, for a market with insider activity taking place. Now, let me also show you the price action chronology on a relative basis of two Asia regional index futures, okay? One of them being the Hang Seng futures, for which the index is at least in part exhibiting state policy insider activity taking place, and the other one being Japan via the Nikkei 225 index future, representing what a large, liquid, internationally active index price action reacting to China's stimulus announcement would look like and behave like. In contrast, over the last two full futures trading days, okay? And the reason I'm using index futures markets rather than cash equity indices is so as to capture and include not just the European and US overnight sessions, but the actual Asia aftermarket headline drop moment itself as well. So this box area, this is the Friday Asia cash equity market trading day, okay? Starting from Asia cash open till cash close to end the trading week in Asia. Yet another strong day upward for Japan, but a massive outperformance in the Hang Seng Index by several percentage points into cash close. And then here is the moment when the China property sector stimulus headline had hit. And Nikkei futures, which had already been trading at fresh 33-year highs, instantly take another jump higher, and then they maintain those levels at their highs on elevated overnight volume throughout that Friday night to Saturday AM full trading session until U.S. close to end the week. Okay. Now, meanwhile, the Hang Seng futures, they also do make another leg higher in reaction as well, but only by like another percent or so, and nothing compared to the massive upside move that had already made during the day prior to that headline release. These are the trading hours in which European and US traders are active. So what you're seeing is like foreigners, European and US traders, that's them reacting to the headline and pushing index futures higher. Okay? It's not really the Asia-based investors anymore. Okay, so that's basically that first half of that chart ends the week on Friday at US close. Okay? Now, the right half of the chart, that starts at Asia AM markets open today, Monday, okay? i.e., these are now Asia investors and Asia equity markets' first chance to react to Friday's aftermarket China stimulus headlines. All right, let's do Nikkei first. So, Japan and Asia investors react to this surprise upside catalyst as one would expect, with another breakout rally of over 2% and the largest single-day rally since January. That's what a rallying market that doesn't know headlines ahead of time and reacts to headlines subsequent to them being made public, that's what that looks like. Now, let's look at the Hang Seng price action. Market opens down from Friday's close level, and then it instantly plummets further upon opening. In fact, the Monday AM Hang Seng futures open level, that basically marks what subsequently becomes more or less the upper end highs of the day. And so, despite this being a China stimulus headline, the Hang Seng Index is not performing as well as it should be. And the reason we know what it should be doing, at the very least, is because of that relative comparison with the Nikkei, right? Look, we don't know what the Hang Seng should be doing in terms of how high it should be going, but we know what it should be doing at least at minimum, which is what the Nikkei is doing, because Chinese stimulus should not be providing more upside to some other country and index versus its own, especially one that's gotten beaten down so hard because of a lack of policy response, and now that policy response has come through, in comparison to an index that has done nothing but gone up. Look, does someone want to explain that price action chronology to me that doesn't involve insider activity at play? Okay, so as I said on Friday, now that this, kind of headline is out there, the question is this the turning point for markets driven by China on stimulus mode? And if it is, how real is this stimulus? How sustained is it, if at all, right? Is it signaling, or is it going to have actual follow-up and all of that, right? If there are insiders, those who are the most in the know, who are acting in financial markets and markets reflecting their behavior. Because who else would be buying into the worst sector of the worst equity market in the world that is just about to or had just broken into bear market territory before any sort of this major, headline drop? Who would just speculate on that and gotten lucky and right? And in such size that they're able to move the index. I mean, that's either the luckiest guess ever, or it's people that are acting with knowledge of policy announcements and policy intent. Okay. Now, I also said that just because that I think that the policy does have legs, which I think that it does in terms of like actual follow through, but just because it doesn't it has nothing to do with whether or not it's actually going to work, nor if markets are going to respond to it favorably going forward, and in sort of the immediate term. Okay. And so that's why I had a separate market view. And my market view was that in order to get that kind of 180 sentiment and action, turnaround, the Chinese government is going to have to do an ungodly amount of convincing an actual policy implementation for a sustained period of time, such that it actually brings genuine demand for housing back into that economy. That's not something that can be solved with just a press leak or a Bloomberg press article or even an official announcement or even the first round of some sort of liquidity injection or some policy implementation to make things easier for home buyers, existing, half-done properties to be able to finish. All of that's just getting back to neutral. That's not going to spur the, bulls back into the property market. That's just to make things whole again, okay? And by making things whole, that doesn't include the creditors of these highly levered property developers, the lever grants and whatnot, okay? As I said on Friday, I'm happy to just sit and watch. And if anything, my trading bias would be to just look for if there was a market that happened to overshoot to the upside on a short squeeze because of this headline, to short to the downside, because the markets are not going to buy what's being thrown out there. Okay, so that's it for me for now. I will certainly keep my eyes very fixated on this and update as new developments occur. On behalf of Blockworks Macro, my name is Weston Nakamura. Thank you for watching Market Depth, and we'll see you soon. Thanks.